welcome back. Before we go any further with our budget tips, we need to discuss something that I think should be very basic. However, judging by the amount of overdraft fees collected by banks across the U.S. every month, it's not as basic as perhaps it should be. I'm talking about balancing your checking account. Now, keeping track of how much money you have in your account is actually pretty easy, believe it or not. All you have to do is add up your deposits for the month, subtract your charges from the account and any bank fees that may incur, and you get your balance. That's it. This is something that you must do every single month. It's really easy and it will save you money. It's a big deal. Overdraft fees can be a real budget buster. Most banks charge between $20, $25, and $40 per overdraft. So if you make a mistake and overdraw your account, the bank will usually pay the charges, but then will charge you a fee for each item that they pay over your actual balance. This amount can add up to a lot of money in a very short amount of time. Here's an example. Let's put the numbers to it. 5 items could cost you up to $200, not to mention interest on the overdrawn amount or merchant charges for items that weren't paid by your bank. Most of us do our banking online, or we use our smartphones and check our balance and access the account that way. We use ATM machines or on a regular basis and rarely, if ever, actually walk into the bank or a credit union. We tend to trust the financial institution to keep track of our checking account balance for us. However, it's not their job, and we get into big trouble with those overdrafts. Remember, it's your responsibility to keep track of your checking account balance. Some debit card and ATM transactions may take up to 10 days to post to your account, so the balance the bank or credit union shows that you think that you have is not really actual and it's not really correct. So what's the solution? What can I do? All you have to do is carry a check register. You can get a free one from your bank, and now they make really tiny ones that you can stick into your wallet. So use that register to write down every charge and every deposit to your account, and when you made them. Then at the end of the month, you simply reconcile the account by comparing those two amounts. You can balance your checking account and avoid those overdraft fees. Keep the money in your pocket, not in the bank's. See you soon.
Hi. Today, we're focused on the future, and we're talking about auto insurance. Us as a youth, we usually get tagged with rates that are through the roof when it comes to stuff like that. So that's why we gotta watch our backs and cover our assets, if you know what I mean. Anyways, let's take a look.
One of the toughest charges to pay each month are charges for insurance, especially auto insurance. We just don't see the benefit, that is, of course, until something happens where we need it. Today, we're going to visit an insurance executive for a major insurance company. What we want to know is, why is an insurance relationship important, and why states require that we actually purchase auto insurance, and how can they do that? Secondly, we also want to know if we're paying too much for our coverage and just how much coverage we need. We're also going to find out about gap insurance and what that is, and whether or not that's a chump move. It might be. Our guest today is Kathleen Benavides from Allstate Insurance. Let's go meet her. I got a ton of questions. Good morning, Kathleen. How you doing?
Morning, Skip. I'm doing great. It's good to see you.
Good to see you. Thanks for having us today.
No problem.
Let me start out with telling you something that just happened to me recently, because it really surprised me. I got a call from my insurance agent, and the woman says, you know, I think you might be paying too much for your homeowner's coverage.
Wow.
I said, now this is my agent. It's not somebody trying to sell me a homeowner's coverage. And I said, really? She said, yeah. She said, I think maybe if we look at this company instead of this one, maybe it'll save you a couple $100 a year. I really couldn't believe that she made that call. Now, is that what you would define as what we're talking about as an insurance relationship? Is that what that means?
Absolutely, Skip. Here's a person who knows your needs, who knows you personally, and wants to help you on a personal level.
Yeah, I think so. Well, tell me, how do you form an insurance relationship? What does it really mean?
Well, the first thing you need to do is actually find an insurance agent that you trust, somebody that can help you provide information. And unfortunately, in today's age, we're dealing with a lot of people who just like to go online because it's quick, it's easy, it's anonymous. But when you go online, there isn't anybody to ask questions, and there's nobody who's going to call you and say, hey, guess what? I think I can find you a better deal.
You know, I bet you're right. And a lot of people do buy their insurance online, don't they?
Absolutely.
Would you say that probably those folks are paying too much money for their insurance?
I'd say those folks probably don't know what they have.
Yeah, that's probably true. And when they have a claim, who do they call?
They don't. You go onto the website, you register as a customer, and you type in some information, and then you wait for somebody from the claims office to call you. But when you have a question, it's really difficult to get somebody to ask, because you're going to dial 1-800 something, and you're not going to get the same person every time you call.
Right.
Whereas if you had a personal relationship with an agent, you can walk into the agent's office, or you can give your agent a call and talk to the same person who knows a little bit more about you.
Makes sense to me. So the way that I find an insurance agent, I could go online obviously and do that, but you're suggesting that I actually walk physically into an office, meet someone, get to know that agent.
Absolutely.
Is that hard to do?
No, if you drive up and down the street, you see insurance offices all over the place. All you
that's
got to
true.
do is park the car and walk in.
I suppose that you're right about that. Recently, I've seen some ads on television, and this is kind of interesting, speaking of auto insurance, where a company is advertising that you can name your own price for auto insurance. How in the world does that work?
Well, it's based on the premise that you're going to go online and you're going to say, okay, here's the price range that I'm willing to pay. What kind of products can I get for this price? The danger of doing that goes back to what I say all the time. Ask what you're buying, because you may not know exactly what kind of coverages you're buying. And I'll tell you, interesting enough, I went on some of those websites to fiddle around and see just exactly what happens when you go to these websites and ask for a quote. Some of them, you'll type in your personal information and say somebody will call you back. Some of the websites say, you know, please wait and we'll put together a quote for you. Interesting to note, though, is when you're looking at the coverages that you buy and it has the little question mark and you click on it to say, what's this? And it gives you a basic explanation of what the coverage is. And then on the bottom it says, certain limitations, deductibles, and exclusions may apply. Please review the policy for details. Well, guess what I couldn't find on the website?
So you don't know what the deductibles are? Is that what you're trying to say?
No, the deductible was there, but you don't know what the limitations and exclusions are.
Ah, I see.
I couldn't find that information on the website. So again, if you had an agent that you could talk to, you could ask them, if a tree fell on my car, is it covered?
That's a very, very good point. So really what you're saying is that unless I know what kind of coverage I need, and it's hard for me to determine that without an agent understanding what my situation is, correct?
That's right. You need a professional in the industry to help you understand what coverage is available, what your needs are, and how much those coverages cost.
All right, well explain to me then, how much coverage do I need? How do I know how much that I need?
Well, first of all, you have to know there's different kinds of coverages that are required. Every state requires you to have liability insurance.
What's that? What the heck is that?
Liability insurance is to protect you. If you hit somebody else in an accident and it's your fault, they will pay for that person's bodily injury, medical bills, wage loss, and property damage to their vehicle. So that insurance really is to protect you if you injure somebody else.
So let me understand this. That only covers the other person that I would happen to hit.
That's right.
But it doesn't cover me.
Absolutely right. No coverage for you. That's for somebody else. But why do you want to do that? Why do I want to pay for somebody else? Well, if you don't have coverage, that person can sue you.
That doesn't sound real good.
No.
I don't want anybody suing me.
No, you don't want to get sued.
Well, so how much coverage is enough, and how do I know how much to have?
Well, the minimum requirement in New Mexico is $25,000 per person, $50,000 per accident. And if you give that some thought and ask yourself, how much do medical bills cost? How much does an ambulance ride to the hospital cost? How much does an emergency room visit cost? How much does some chiropractor or some physical therapy or some other medical bills cost? How much would it cost if somebody couldn't work for 3 weeks? And all of a sudden you start adding that up and your $25,000 doesn't go very far.
Got your ching going off in my head like
Yeah,
crazy.
exactly.
Just checking them off, my gosh. You could be talking $300,000 or $400,000.
You could. So I recommend that everybody have at least $100,000 of coverage.
Wow.
And that generally will cover what is resulting from an accident.
Does that cost a lot of money?
Well, that depends on you.
Ah, well, what are the variables?
We look at things like age, whether or not a person is married, your driving history, and would you believe your credit history goes into that?
Really, not the credit thing again.
It's the credit thing again.
Oh my gosh, even that too? I know that they check credit reports for jobs and they check credit reports for loans, obviously, but insurance?
That's right. People with good credit histories are tending to be more responsible behind the wheel.
Wow. So you're saying $100,000. Now that $100,000 would cover what if I hit somebody?
Well, again, that would be your liability bodily injury coverage, and so that covers medical bills, wage loss from an accident, and something called pain and suffering, which is basically additional money to compensate somebody for being hurt in the accident.
Okay, but and you think 100,000 is probably enough to cover that?
Right.
Okay. Well, see, I don't have to worry about that, Kathleen, because I have full coverage.
Oh, you do?
Yes, I do.
So what exactly do you think your full coverage is, Skip?
Well, my full coverage covers every possible thing that could happen to my car.
Now,
Like if a comet comes down and hits it or whatever, I'm covered.
Now, you know, people, Skip, I always tell people, if you have full coverage, then you really have FOOL coverage because
You're calling me a fool?
I just might be. There's no such thing as full coverage. You cannot be fully insured for every loss that occurs.
What do you mean?
You just can't. Not every loss situation is covered. If a nuclear bomb went off and fell on top of your car, guess what? That is not covered.
Really?
Really?
So I don't have full coverage.
No, you don't.
All right, but let's talk about what full coverage is. Now, what I do have is I have $300,000 liability, that I
Right.
do know.
Right.
And I have comprehensive coverage.
Uh-huh.
What is that exactly? What does
Okay.
that cover?
Comprehensive coverage is coverage for your car, and it covers things that aren't a collision. So basically, theft, fire, and vandalism.
Okay.
So when people say full coverage, they usually mean comprehensive and collision. I get calls from people all the time and say, well, I need a rental car. I have full coverage. And I say, well, no, you didn't purchase rental car coverage. You just have comp and collision. And it's the old, but I have full coverage. I don't understand.
Okay.
So you have to know that these things are separate things that you purchase.
Which is something your agent would tell you.
That's
Again,
right. Your
I'm
agent-
not going to figure that out online. I'm not smart enough to do
No,
that.
no, because you only see online what the screen shows you.
Sure, makes sense. And the agent can actually help you. All right, so I also have collision insurance. What does that cover?
Collision insurance covers your car if you crash it into something. Doesn't matter if you're at fault or not. So whatever you crash your car into, you get coverage to get your car fixed.
Yeah?
Right.
What if a deer comes out of the forest and I hit the deer? Is that collision or comprehensive?
Was it stopped or stationary when you hit it?
It was stationary.
All right. Well, actually, hitting an animal, Skip, is considered comprehensive coverage.
Oh, really?
Yeah.
So that's not a collision.
It's not a collision because the policy defines hitting an animal as a comprehensive loss.
Whereas if I hit a telephone pole,
That's definitely a collision.
yeah, and one that I'm not going to like a heck of a lot
Yeah,
either.
you're not going to like it. I
Now,
think the
there's-
telephone pole wins.
There's something else on my policy I noticed called uninsured motorist coverage. Why? And my agent said I should buy that. Why should I buy that?
So statistics show, Skip, that anywhere from 60 to 40% of drivers don't purchase insurance. So it's really important that you buy that uninsured motorist to protect yourself.
Now, is the deductible less or more on uninsured motorists?
For property damage on uninsured motorists, the deductible is $250.
Oh, okay. So, you know, we should actually define deductible. I suspect there's plenty of viewers that are watching this right now that deductible, what the heck does that mean? It's a cool insurance term, but
Yeah.
what does it actually mean in terms of dollars?
It's the part that you have to pay towards the repairs of your car. So the deductible is only applicable on the comprehensive or the collision coverages or the uninsured motorist, as we just talked about. There's no deductible for any of your injury coverages. So when you're talking about liability to somebody else, there's no deductible. And you know, a lot of people mistakenly think that the deductible only applies when they're at fault. I get calls from people saying, I wasn't at fault. Why do I have to pay my deductible? Well, that's part of the policy. The deductible always applies.
Well, that makes sense. Because I can remember thinking that, certainly in the past.
Right.
Along the same lines with deductibles, etc., they vary across the board, of course. The higher the deductible, the lower premium I'm going to pay?
That's right, because then more of the risk is shifted to you. So insurance is kind of like gambling. The insurance company has to decide what's the likelihood that there's going to be a payout or a loss on this particular policy.
Right.
And that's why you look at things like credit history, age, driving history, marital status.
Sure, makes
All of those
sense.
things are predictors of whether or not there's likely to be a loss. And that's how insurance is priced.
Right. That does make a lot of sense. Again, question about the deductible side of things. If I have an accident and let's say that the total damages on the car are maybe $1,000.
Okay.
And I have a $500 deductible. Can I opt not to file that claim and pay the extra $500 myself, or do I have to file the claim every time?
Well, that's up to you. You have to weigh that. Do you want to pay $500 or do you want to pay the $1,000? And that's something that you need to decide yourself.
Because if I file too many claims, my insurance premiums are going to go up, correct?
Absolutely.
Now, I've seen a lot of companies, and maybe yours is one of them, that has what they call accident forgiveness. What in the world is that?
Accident forgiveness is actually a feature that you can purchase on your policy. So a lot of companies today are offering more products than just a standard auto policy. So you can purchase things like accident forgiveness. So your first time you have an accident, you don't get a rate increase. You can purchase things like deductible reduction. So if you don't have any claims over a 6-month period of time, your deductible is actually reduced.
Really?
So those are features that you can purchase. You can purchase replacement cost on your policy.
Now that's an interesting term, replacement cost. We used to call that gap insurance. Is that the same thing?
Somewhat. A lot of people think that if their car is a total loss, meaning the cost of repairs are more than the car is worth, that they're automatically going to get paid for the cost of a new or a replacement car. And that's not how it works. You get paid for the actual cash value of your car. So if you're driving a 2005 Chevy, you're going to get paid what is the value of a 2005 Chevy. It's a used car. It's not going to have the same value when you paid for it 5 years ago.
But what if I owe more money than the value on the car is? Don't you pay me that?
No, we don't. We call that being upside down because you owe more on the car than the car is worth. And that's where your gap insurance comes in, is to take care of that overage. Because let's just say, for example's sake, you owe $10,000 on your car. And you wreck it and you total it out, and guess what? It's only worth $8,000. So now there's $2,000 that you're not getting, but you still owe on the vehicle.
Yeah, I don't like that equation at all.
No. So gap insurance will step in to take care of that. Now, replacement cost, in a very similar manner, is only available on newer model cars. Typically, it's only 3 years and less, and it will pay for the replacement of a car similar to what you had.
So let me understand that. So if I own a 2005 Chevy Impala and I have this replacement coverage, I would go out and buy a where I could buy another 2005 Chevy Impala, correct?
Right, but generally it works for you have a 2010 Chevy. And so you wreck your 2010, it's brand new, so maybe it's lost some of its value because you've put some miles on it.
Sure.
But the insurance company will pay for the replacement of a similar model.
Of that, but the same auto year, I can't upgrade to a 2011, can I?
Actually, you could.
Really?
Right.
So that might be coverage worth buying.
It might be, but again, it's only on newer model cars. You can't buy that on a 2005.
How does that premium compare to the gap insurance premium? Do you have a feel for that?
You know what, I haven't priced that out separately, so I couldn't tell you the difference on the premium there. But gap insurance, again, you buy that when you buy your loan, and these things are looking more at your newer model vehicles.
Makes sense to me, and that is, again, something that an agent's going to tell me.
Right, and that's something I always tell people, what's the most important thing to do? Ask questions.
Of your agent.
Of your agent, that's right. You need to have a person that you can ask questions because most of us don't understand all these terms, all the costs, and all the things that go into it.
Boy, it's the truth, and it really is complicated. Thank you so much for being with us today and allowing us to come into your lovely office.
You bet.
And we'll be right back with Emily's view of this interview in the summary segment. See you then. Welcome back. I thought that was a great interview. What'd you think, Em?
I thought it was great. Insurance can be a little bit complicated, a little bit confusing, so it was great to have Kathleen help us out, tell us about some of these terms. She talked about a lot of terms that most of us don't know, deductible, premiums, all of these different things, what you should and shouldn't buy. It's really important to have that relationship with an insurance person. That is a key to financial success.
Well, it seems to me that probably she also emphasized the important thing, and that would be the insurance relationship.
I think it's critical, especially when you're talking about maybe thousands of dollars adding up really quickly in liability insurance, other fees that can come out of an accident. You need to make sure that you're adequately covered, and the person to ask is your insurance agent.
Makes sense to me. We'll be back next week, and right now, your questions for classroom discussion.
Thanks, guys.